All right, here we go. We're going to chat about what are the results of the Fed rate cut with some interesting twists that you want to think about if you're going to be entering the housing market now, or maybe you're thinking about it for 2025. Here is an interesting topic. This came back to me via a text this afternoon after the rate cut was announced and the market started going in the wrong direction, meaning mortgage rates were going up. The person's thoughts were, well, the market anticipated rate cuts, but the reason that the market is not doing so hot is because of the reduction of rate cuts next year. And I'm getting a little technical on you, but there's partial truth in that. Though the reality is we want to look at what's happening right now with mortgage rates. So I'm going to share with you this chart right here. So give me a second, share this chart right here. And we're going to talk about what has been happening with mortgage rates because they started cutting rates in September of this year. And mortgage rates, yes, they did come down a little bit, but they've actually gone up higher than, and this cuts off last week, and rates are up about 0.25% right now from last week. So what we're seeing is that while they've cut rates in 3 instances, 4 total cuts, that mortgage rates have actually gone up in the last couple months since that time. So what does this mean? If you're looking to buy a house in 2025, it's really hard to kind of disseminate the data. You got, rate cuts happening, but mortgage rates actually have been going up. Someone's feelings were that is historical, that rates will come down after rate cuts, but I did talk about that on another video where I shared how historically that is not the case. It takes numerous rate cuts for mortgage rates to actually feel the impact and therefore then come down. In this case, the one thing that is constant is inflation. So from September to now, Powell has revised his expectations for inflation to remain higher next year, which is what's leading the cause for for them to have less cuts. Why is this important for 2025 if you're looking at buying a house? Well, the incoming administration has talked about tariffs and other policy decisions they're going to make right when they get into office. So what does this mean? Everyone's already acknowledging that this means that they expect inflation to stay or go higher. All that to be said, Powell was talking today about this, and he was very cautious about saying they need to wait and see what happens to see what the impacts will be. But he's never talking about mortgage rates. In fact, he makes that very clear if you watch his Q&A sessions after these meetings. But what is it with the Denver housing market right now? Let me share another screen with you because this is interesting as it relates to Denver housing. This is Altos, okay? So this is through Homestead Title, local title company here in Denver, but this is Altos, and what we're seeing is days on market at 103. Now there's some seasonality in there. You got to keep in mind this time of year, there are just naturally less people buying homes. So if you're buying a home and you're under contract right now, you're probably reaping those benefits of those seller concessions. And as I said in a prior video, we are seeing people's appraisals come in higher. Yes, they're paying more in mortgage rate, but they're ready to buy. Therefore, in their instances, they're making out with equity when they walk into the homes. But days on market at 103 days. What is this to say for you if you're thinking about buying in 2025? Okay, so what you want to think about there is if the days on market have been rising, will more people put their houses on the market? If interest rates stay higher, it's probable that less people look to put their houses on the market. Some people will finally come to wrestle with the terms that mortgage rates are going to stay stubbornly higher. And as I talked about in one of my previous videos, that might be a healthy thing for the housing market because it actually would yield that we could see prices stabilize, which is actually good for you if you're thinking about buying. Because if rates suddenly sank, we know that prices would go up from what happened last time. So I want to end this with things to think about when you're thinking about buying in 2025 and how to maximize getting the best interest rate. So of course, you want to make sure your credit score is optimized. I don't care if you have a 720 right now. That might mean you just need to change how you make your credit card payments. Rather than paying it when the statement cycle ends, maybe move it up 3 to 5 to 7 days so that there's only a few days of activity and it will maximize or gamify your credit score that many more points so that if you get a conventional loan, you're getting a little bit better interest rate. And as it relates to those credit cards, if you have a good amount of money set aside to buy a house, but you're carrying credit card debt, the actual cost is going to blow your mind if you look at the back of those statements. That is something you kind of want to watch for, because we get into this mindset that we aren't, in fact, paying that much interest, but we kind of just come to terms with credit card debt. And if you're carrying that debt, not paying it off, don't look at the back of the statement. You might shit your pants. So, other things to look at possibly paying down the credit cards. If I pay down the credit cards, follow me here, but ultimately that led to me having a smaller down payment. One would say, well, Ray, my house payment is going to be higher because I put less down. However, put it all into a bucket. My monthly debt is my monthly debt. If I chipped away at a couple $100 of credit card payments and put less money down, I might actually be better off in my total debt every month than if I would have put more down on the house and kept the credit card balances. So think about how you're planning your down payment as it relates to total cost of living, not just so much the mortgage payment. Of course, that is to say that you would remain diligent afterwards and not use those credit cards and get those balances back up, because that could get you into hot water if those payments went up and you ended up with a slightly higher payment because you did pay credit cards off and put a little bit less money down. So some other things to think about. If you're putting a little bit less down, let's say 5%, you might want to think about comparing FHA to conventional. I know if you have a really good credit score, you may say, Ray, that just doesn't make any sense. Why would I ever compare FHA to conventional? I've heard conventional is just a better loan as far as it goes. Now, I would say to that, get educated. Talk to your mortgage broker. Make sure that you are looking at both options. There may be instances where it is straightforward that the conventional loan is better for you, but it may be the FHA. So make sure you're cross comparing and look at buy down versus not buy down the interest rate. You've recently just had a conversation last night with someone buying a $1.5 million house. And it got very interesting once we started talking about buying down versus not buying down the interest rate, because in their case, they actually intend to pay the house out a very specific amount of time. Therefore, that conversation was very different about should they buy down or not buy down, paying points to get a permanently lower interest rate. If you're not sure about that, definitely check out other videos I have on the channel, because they do discuss points and things for you to think about when buying a home. And in this market, look, if days on market is averaging 103 days, I would say to you, negotiate, negotiate, negotiate. And that's why your agent is uber important right now, because they need to be a strong negotiator, have experience in this market. And as I call it, be a little bit of a bulldog so that you can get the best deal. If an inspection comes back with issues, do you take a credit towards closing costs, or do you take it to have the actual items fixed? That's something you want to get educated about with your agent. So make sure you got a good, strong agent when you go to buy a house. So as it goes for 2025 rate projections, I hate to say it, but unless something changes with inflationary data, as I'm watching the market right now, it is bleeding red, which means mortgage rates will be higher tomorrow. If you haven't heard, they are a little bit higher right now than they were this morning as a result of Powell's comments about reducing, yes, as that person said, less cuts next year, but more so, I think it's tied into the revisions of what they expect inflation to be at rather than, and he kept focusing on the progress, but he kept kind of shifting when he was talking about that they had upward revisions since September. And so a couple of the journalists sitting there in the audience asked him, why would they be thinking about rate cuts in 2025 if this is the case? And he said, it's kind of something they have to kind of watch and see. And he said that since I've been watching these three last meetings with the rate cuts, he's been saying that all along. But anyways, all that to be said, there are some things and considerations there. I hate to say it though, for my projections for 2025 rates, stubbornly higher. I don't see them coming down. If the Trump administration does what they say they're going to do with tariffs, I actually anticipate inflation to remain stubborn. Therefore, mortgage rates, the kryptonite of mortgage rates is inflation, guys. That's why we're seeing mortgage rates do what they're doing. Therefore, rates to stay higher in that 6% range, above 6%. Make sure you plan, budget accordingly. Reach out if you have questions, calendly.com/mortgage maestro. Be well, everybody.